On. It's not working.
UiPath is trading up in the aftermarket. Their ARR was up 12% in the quarter. They did guide revenue above consensus for Q2.
That's the only thing bond yields show. Markets are trying to process uncertainty about policy and the economy. Since the Fed remains in a good place, the U.S. economy is in a good place as daily.
Ding, ding. Okay. And what else?
But as Asset Reiterating has been briefed on 3 trade deals that are about to happen. It could happen in the next week or two, so Asset. And it's productive talks with India.
Costco COST reporting $63.2 billion in revenue versus $63.1 consensus estimate.
GAP reporting same-store sales up 2% in the quarter, $3.5 billion in sales, beats the $3.4 billion consensus. Called Papa.
Costco $4.28 in EPS versus the $4.25 estimate. Total company same-store sales for Costco were up 5.7%. In the U.S., they were up 6.6%.
Back on the gap, diluted earnings at 51 cents, beats the 44 estimate, and revenue slight beat as well. Golf after popping.
Costco inventory was essentially flat year over year at 18.6 billion.
What is the fucking line on here? Okay. What's up, everybody? Costco out. So Dell looks good. Costco up a little. Which one is the one I use? I can't find it. Okay. What do you mean a Dell? I'm strictly a Commodore 64 user. Okay. Strictly Commodore 64. Yeah. The mechanical. You know what it is? The other keyboards. I sometimes I don't know if I hit the letter or not. The mechanical keyboard, you feel it. You know, the quiet keyboards, I don't know what the hell I'm doing half the time. Maybe I'm just used to it. I gotta move this coffee before I spill it. How's everybody doing? So it looks like Costco and Dell moving in an upward direction. What was there was another one that was pretty, but what was the other one? Dell, not Dell. Oh, Marvell. Did they report? Yeah, they reported down a little bit. Marvell's been struggling down here. It's got more like a more cyclicality to it. Let me take some of this stuff off so we can see what the hell we're doing too. Oh, and the other one. All right. And you got Zscaler. That's up. These cybersecurity names, boy. Woo wee. Damn. Yep. The whole group. I mean, you had a little dip once upon a time, and that's gone. There's another cybersecurity name nobody ever talks about. That's just an absolute beast. It's this one, right? Yeah. CYBR.
What she sees is a general sense of cautious optimism.
Cautious optimism. I mean, these are just, they're stud names. Problem is, they're not really that cheap anymore, That's kind of the issue. But off dips, they've been supported for quite a while now, right? You have a crowd, obviously. That's probably the stud of the group. Look at that. New highs. Every dip, there's some buying with time in these things. This one had a dip recently. PANW. There you go. Right. That's basically a dip right there. That's as good as that's as big as a dip as you're gonna get in these names right now. And obviously, the one you guys are probably sick and tired of me talking about, this RBRK. I mean, look at this move. This is stupidity now. Stupidity. Let me lower this stuff here. Hold on. But yeah, I think kind of to what we were talking about. I think this is the sweet spot of the market. Like, this is what institutions want to own. This is what we want to own. And there's just been, the IPO market's been quiet. There's really a lack of fresh names. That's the big issue here, and that's why you got this continuous crowding in the same shit that happens so quickly. Right? You get rally off the lows, off a correction, and they just boom, they go right into the good-looking stuff again. That's the problem. I don't know, I don't know what's going on with the IPO market, why it's so quiet. It's just very, very little fresh bait out there. We've been complaining about it a long time. All right, let's talk a little bit about the market. I won't keep you guys too long because I feel like dog shit. Under the weather, allergies, I think more so than anything. My head feels like it weighs 6 tons, and just the nose, eyes, I feel like crap. So I won't keep you guys too long. I'll probably run out of saliva at some point. But let's talk, because it's a little interesting here, and I think there's a good way to frame it of where we're at. Okay, again, a lot of noise. Add some more noise to the equation. Ultimately, believe it or not, I truly feel that, and this sounds idiotic, okay, but I feel that the more confusion and noise that enters the mix here, I think the better the setup that it becomes, right? I think as soon as there is clarity and as soon as people feel good about things, at that point, if you're not there already, you're going to have a much crowded picture, and it's going to be late. And I think there's going to be a lot of risk out there, especially not just the indexes, but to the point we were just discussing, these crowded names that just get oversaturated in a short amount of time. So this confusion, and now we got within the courts with kind of these tariffs and all, any weakness, right? Anything that can shake the tree a little bit and prevent more bears converting into bulls, I think it ends up being a good thing, right? Because I truly believe, the biggest risk here, in my opinion, there's risk obviously in all different directions, especially now after we rallied so much. But I think the biggest fear amongst a lot of people managing money and clients and positioning and stuff like that is that a lot of the stuff that on the macro side has been keeping people on the sidelines, if and when that starts to turn and you get kind of this inflationary picture that kind of looks dead already, but starts to really cool off even that much more, right? That better macro backdrop, you're really going to have a lot of people chasing risk assets and equities, right? So again, the timing of how that may transpire or when it may transpire, if ever, is the $1 million question. But I think that's the risk, right? And I think that has been the risk since the lows, where nobody had any exposure on the long side, and continues to be the risk. Um, so that's big picture wise, and that's why I think any little confusion that enters the equation and can keep things at bay, keep a lid on things, I think ultimately is a good thing if you're looking at this game through a bullish perspective, right? Okay. That being said, I think we're at a point now, right? And if you remember, kind of our conversation has been around that again since the lows, right? That you had not just systematic funds that were max short, but you had a lot of, on the institutional side, long only funds, hedge funds that really had no interest in equities and for quite some time. Okay. That's been the narrative. And that's what's kind of been this silent bid, right? Alongside all the other stuff, that there's been a silent bid in this market all the way up until this point, right? Any little weakness, you see how they just swallow it, right? They come in and buy it right up. And like we said, especially in the names that everybody wants to own, because there's a limited amount of them. I think we're at a point now, and this is why it's getting a bit sloppy out there for a couple of reasons, but I think this is one of the reasons. You're hearing more people start to talk about it, right? Even on the retail end, because again, if you remember, we made the point a few weeks back where a few years ago, you had to be more on the professional side to have access to this information on the positioning end, how players and funds were positioned. Now, any retail player eventually gets their hand on that. And I think now what I've noticed is you're hearing more about the risk of a potential performance chase, right? You're hearing more about that risk out there. And usually when you start to hear that, it's already been underway. And people are going to try to take advantage of that. And a lot of times they get caught, right? Chasing longs because they feel they have to, because they think there's a lot more chase coming, and some sort of rinse or chop, whatever it may result in. But a lot of times something comes around to shake the tree a little bit. I think today was a really good example. You had Nvidia, everybody excited off the quarter. Then you had this tariff news overnight. Last I looked, I saw S&P up 100 handles or even more than that, and you see quite the fade today, right? So I think that's kind of the short-term risk here, is that a lot of eyeballs and a lot of mouths are talking about that performance chase, and when everybody's looking for it and everybody's trying to be a part of it or take advantage of it, you usually get a little wrinkle, right? That kind of knocks you off that thought process, that thesis. So that's where I think we're at currently, and that's why I think the price action has been stickier in the sense. The flow has been kind of sluggish and messy, because you got to understand too, because of the lack of new names and because of these same names, even if they're speculative names, it's the same speculative names, right? If it's cybersecurity names, same cybersecurity names. Because of the lack of new names, you get this chase and this crowded positioning rather quickly. And then what you end up, the end result is like right now, for example, everybody who was all those sweeps and all that buying we were seeing in like a Rocket Labs, right? That started up. Now what you're seeing is a lot of those profitable positions and trades, they're rolling, right? So it adds to the chop. You kind of see it adds to kind of that sloppy flow and price action, or some of the quantum names like the QBTS. You guys know all these names already. We've been talking about them for weeks, and I'm just bringing up some of these more speculative names, right? So what I'm getting at is on a short-term basis, I think there's more risk out there, especially in names where things can get a little bit tricky just because they've come a long way and a lot of people are trying to take advantage of kind of this quote unquote melt up price action. Okay. Another thing on the speculative side, and I got caught in a couple. Well, one of them, but kind of the last batch of speculative names I played. Um, I didn't have much success. Kind of lost money, but these speculative names, and you guys know, for those of you who trade them, after they run, right, they do these offerings, right? They look to take advantage of these rallies and these short covering moves, but to try to raise money as they should, right? So that's added risk and supply, especially in that space, right? In the more speculative area that you got to deal with now that you didn't have to deal with a couple of weeks ago. Um, Another aspect is these short reports and blogs. They lick their chops when they see some of these, momentum cheap stocks flying that really have no fundamentals and maybe have some risk to the story. They come out with these hit pieces, right? And I think TEM, if I'm not mistaken, right? TEM was hit with that yesterday. So that's a risk now, especially in that space that you didn't necessarily have to worry about a couple of weeks ago. Okay, so again, maybe it doesn't have to be the end of the world, but if names are overextended and they've really been lit up already flow wise, that risk goes up quite dramatically now. Okay, so ideally, what you want to see is even if it's just a 1 day, 2 day sell off, Trump related headline, whatever it is, kind of shake the tree a little bit, get people off focusing on a potential melt up performance chase, right? Start to worry about the risk out there again. And I think that adds life and firepower to kind of what we've been seeing up to this point, right? The more of a little reset you get, again, even if it shakes out some of these positioning um, reads that we look at continuously. I think that's all positive. That's all positive. The more momentum you get to the upside, and the more you see a chase, it can happen quickly where you get that offsides positioning, and then any little risk that shows up could be dangerous, right? Obviously, if you get caught in them. So that's kind of where we're at, I think, as a whole. And you see it on the positioning side as well. So let's look at it, right? This is a quick note from a Goldman trader I follow regularly, and I feel exactly kind of what he states here, right? What we've seen to this point from the lows, in my opinion, has been kind of a beta chase. I think in the flow is what I'm talking about. It hasn't been institutions building positions in new names, right? Or new opportunities. It's been, we have no exposure. The momentum has flipped, right? Systematic funds have no choice. They have to put on exposure. And then kind of, these hedge funds and long only funds have to at least cover shorts, if not start to add some exposure. So the majority of the buy side flow we've been seeing is what I put into the category of more forced buying than anything else. Okay. And at some point, that what you see is that runs out, right? You get to a point, either you get the melt up and then everybody's forced to chase, you get offsides in the other direction, and you got risk obviously to the downside, right? A lot more risk to the downside. Or kind of what I'm telling you we should be rooting on here is a little bit of shake and bake here, where it kind of puts a halt to the forced buying, and now you see some of the truer buyers show up. Okay, so that's kind of what we're waiting on, and to this point, I haven't seen much of anything different than forced buying. Right, even the more speculative names. Granted, it doesn't have to be every name out there. I'm sure some names were bought because they wanted to get long, but even the majority of these speculative names, they're heavily shorted, right? And a lot of the call activity you're seeing is shorts hedging those positions by buying calls. Okay, again, that's in my opinion forced buying. All right. So he's making the point here, very similar to what I've been saying, where it's been a beta chase, right, with market participants trying to get their nets higher, their net exposure higher. And he has a quote here from Goldman Prime, which kind of looks at positioning from the funds. and U.S. equities saw the largest net buying in 2 weeks, both a mixture of long buys and short covers. Okay, so I agree with that take that it's kind of been what we've seen to this point, has been more force buying than anything else. This is what we look at quite regularly from Sentiment Trader, hedge fund exposure and single names in equities. And if you remember, right, has spent a lot of time, I mean, throughout, even since the 2022 lows, in net short territory, right? Kind of would pop into, long exposure territory, again, being forced in a sense into long exposure. And then every time they were forced into long exposure, there'd be a little selling. And because because it was forced buying and not any conviction behind the buying, they very quickly get aggressive and not only take that long exposure off, but get short. Okay. So where we're at in this process now, we're seeing them little by little, as you can see, being forced to add long exposure on. Right? So this where we're at here is not necessarily danger territory all the time. Okay. Of late, you can see every time they've gotten to this point, there's been some sort of little shake and bake to rinse them out. But I've seen, again, melt ups like you can see here in 2018, okay, where it really got aggressive, right, kind of to the 0.75 mark. But once that took place, you really had to pay the price in that off of that rinse that followed, right? So it was a more aggressive rinse when it showed up. Okay, so this is not necessarily danger territory yet, but if this does extend, yes, short term, you're going to see melt up price action more likely in the indexes. Okay, but ultimately that's not a good thing. Okay, so what we want to see is a little bit of resistance here, and off that resistance, hedge funds not only trim that long exposure, but possibly even get short because they're still not convinced from the macro backdrop out there, right? Okay, so that's where we are here in hedge funds. Because of what this trader mentioned. U.S. equities saw the largest net buying in 2 weeks. You're getting some big aggressive covers, especially on the side. Here's the Ridex funds, which we've been looking at. You can see this too, right? Pretty aggressive. This is bull flows from the Ridex funds. Okay, quite dramatic. And if you remember, the bearish flows, which were really aggressive into the lows, have been unwound and then some. Okay. So again, on a short-term basis, because you can see these things unwind quite often. Right? It's not apocalyptic when this happens. Right? It's when you don't get that little bit of shakeout and you get a melt up through it. That's where it can get more dangerous. Okay. And this is what it would look like if you put those two, the bull and the bear flows, in an indicator. They could name it the Nova Ursa. Nova meaning bullish, Ursa meaning bearish funds. And you can see right into the lows of the correction, quite dramatic. And now we're all the way up here, right, on the long side. Okay. So you see how the market found a little resistance, and you can see already it starts to cool. The more you see resistance, or even if you get a nice 2-day rinse, that's all it takes sometimes, right? A couple days of spooky selling where people throw out the melt out playbook and become bearish again. A lot of times that's all it would take. What else we got on here? So that's kind of the if you want to put it in the cautious camp, right? What I showed you guys here is short-term cautious. I think there's more risk out there on a short-term basis. That's the better way to phrase it, okay? Because net, I'm still pretty constructive, right? The only thing that wouldn't make me constructive is we kind of melt up and rip through this. Then I think obviously, well, you guys know how I feel about that. It becomes more dangerous. But if we can kind of get that little bit of resistance here, I think ultimately that's a good thing and sets up, I think, the next entry in trying to get long, right? And here's why. Okay, you still got, I think, a lot of constructive things, big picture wise. Okay, they're still constructive. These are Sharpies, right? And again, they haven't really aggressively, they haven't got aggressive on the long side yet. Okay, but they were aggressively hedged and they've covered the whole entire hedge and dipped into net long territory. Now, what's even more telling, I think, for me now is that you've had a rally of this magnitude and they're still long. Okay? It's totally normal for them after a rally like we've just had for them to slap hedges back on into the strength. Okay? They do that plenty of times, especially when positioning changes, right? If hedge funds are getting long in the futures market or small specs are aggressively flipping long in the futures market, you're going to see commercial hedgers start to get aggressive in slapping hedges back on into strength. Okay? The reason they haven't done that yet is because hedge funds are still net short S&P 500 futures. Okay? Small specs, the riffraff, as we refer to them, they were rinsed out of that huge long exposure they had, and they still haven't added back any long exposure. Okay, so that's why you're seeing Sharpies really not getting too concerned here to the point where they put hedges back on, because positioning really hasn't shifted big picture wise dramatically at all yet. Okay, so that's still a constructive, a very constructive sign. The credit markets, as we spoke about, again, not to say, right, I guess it is the you had potential crash risk that was entering the picture post Liberation Day. Okay, for whatever reason, okay, there were some cracks in the credit market. Let's say that's the better way to put it. Okay, that has completely subsided. You got swaps and spreads have tightened up quite dramatically here, right? If you think about it, nothing really has changed macro-wise. The Fed didn't start cutting rates, right? The Fed didn't implement QE, as far as we know, okay? But spreads and swaps have tightened quite aggressively, right? That's a constructive sign, okay? So these are still bullish. Financial conditions, this is what you're looking at now, all right? And the way to look at this, as this thing spikes, that means financial conditions are tightening up. Right? So if you backtest financial conditions to the equity market, anytime financial conditions tighten up, equities are a high probability they're under pressure. When financial conditions ease, equities fare a lot better. Okay? So when this is rising, that means financial conditions are spiking. And a lot of times into corrections, right, equity market corrections, you see financial conditions tighten, spike, right? You see it here, you see it in 2023. Now, a lot of times, after financial conditions tighten aggressively, what kind of eases that pressure is the Fed pivoting in some sense, right? Something usually comes out of the Fed, right? You get an equity market correction, there's some cracks in the credit market, the Fed capitulates and they cut rates or do QE, and that usually where you see that pressure relieved aggressively. Okay, you can see the aggressive move here, and we really haven't seen the Fed hasn't pivoted as far as I know. I just saw an update that Powell met with Trump yesterday and kind of was talking tough, saying, "Listen, we're going to do what we're going to do. It's not political, and we're not paying attention to anything. We're going to go off economic data, and that's it," right? Kind of putting his foot down. So Powell didn't pivot at all. Now, there are rumors that, or chatter, I should say, of Bessent and the Treasury market, kind of Treasury QE being put in effect or some shit like that. Again, there's chatter out there, but I think the net takeaway for us is that financial conditions have eased quite aggressively. All right? That's bullish. That's not bearish. That's bullish. Okay? Again, what we saw throughout 2022, guys, the bear market in 2022, we saw financial conditions continue to tighten. We saw credit swaps and spreads continue to widen out. Right? So anytime there was a rally, a bear market rally through that process, okay, the end result was right after that rally fizzled after a week, financial conditions would tighten again, spreads and swaps would widen out again, and you saw that whole process play out all the way literally into the fall of 2022, right? From Jan to the fall. Okay? Here, and that's where kind of, if you remember, the UK bond market cracked, right? And that's where kind of Powell was changing his tune about inflation and all that, right? So what we're seeing here is a quite aggressive move in financial conditions, liquidity, all that stuff, without really any rhetoric for us to hang our hat on. But the data is telling us something completely different, right? Again, that's bullish. That's right. That's constructive. Okay. You buy dips and pullbacks when these things are favorable. Right. When you don't buy dips and pullbacks is when they're not favorable. Again, 2022, the example. All right. So I'm showing you kind of the big picture backdrop here that really still hasn't changed even with the rally, that should keep us constructive. And even though there's some short-term elevated risk out there, that could result in an opportunity, right? That's what I'm getting at. Yeah, and just again, looking at extremes, and I look at everything at extremes. On the flip side, you don't want this to get too easy, right? You don't want this to get to another extreme, because that's where it can do damage in a different way, right? Who knows? Rates start accelerating higher, right? You can get kind of negative results from being too easy. So you kind of want this, right? This kind of back and fill, choppy type action kind of lengthens out the process. Here's another look of financial conditions, pretty much just a colorful line with a moving average there, so you can get a better idea. Okay? So things, again, from what I'm looking at from the lows, yes, you've had positioning and sentiment improve for obvious reasons because of the price action and some of the Trump rhetoric softening and stuff like that. But we're still at a healthy spot here to where if we do get some sort of resistance, some sort of little breather, we want to get long off that pullback. Now, here's where the problem kind of shows up for me as a stock player, more so than the indexes or anything else. Okay, I want to focus on names here, right? Because again, if you've got a little bit of elevated risk, right, and you think maybe it would be a good thing for some resistance and a little shake and bake, you try to find maybe alpha names that could be rotation. What we've been seeing, the appetite and the interest is in the same names. Okay, now that's not my cup of tea, and I know a lot of you guys trade well that sort of style. So what I'm getting at is basically playing the same names, just trying to play them off dips and pullbacks. Okay, that's what kind of the flow has been signaling and indicating to us to this point. All right. As you guys know, I've mentioned it a million times, what's kind of been my most comfortable state in trying to play through a bull, quote unquote, bull trend or bull market was kind of that source of new names and new setups, right? And focusing on that after you've rallied, pretty strongly off the lows, right? Kind of keeps me out of trouble. If there aren't any new names, right? That means I'm not getting aggressive on the long side. I'm not chasing the same names all the way up because that's how I would always get caught, holding something at the top. So that's kind of the issue for me here, is that I still have to take the approach, okay, even though that I'm constructive big picture, I still have to take kind of this tactical trading approach to how I'm playing in this environment. You know, a lot of the names, the few names that I like, okay, have already matured and risen quite dramatically. And the stuff that really is crap, in my opinion, it's pure momentum and speculation, and there's nothing wrong with it. I love trading that stuff, especially at good spots, right? When they don't get too extended. But that's the other stuff out there, right? Like that's the other stuff out there that's kind of new, or if you're not playing the same names that are up so much. And I don't what I'm getting at is I don't want to position in that stuff for the longer term. I don't want to own crap longer term. You understand what I'm saying? Like the way I kind of look at things is I want to trade the stuff based off momentum, whether it's crap or not. If it's catching sweeper activity, has momentum at a decent spot, I'm willing to play it. Okay. But I don't want to build positions and hold that stuff. Right? Because a lot of times it's all story. There are no fundamentals. There's no, right? It's just hype. It's just hype behind it. So the stuff that I want to build positions and, give a little leash to is some of the good looking growth stuff. Okay. So that's kind of the dilemma I'm in, is that even though I still feel constructive about the signals that I pay attention to, I still, as of right now, I still have to remain tactical because I feel that, there's just way too much risk in the crap out there. That's kind of where I'm at. And, here, and I'm dead honest with you guys, I don't sugarcoat it. 2022, the lows in 2022, the signals that we pay attention to into the 2022 lows were as good as any low that we've seen in a correction or bear market. Okay. The difficulty, the problem for me coming out of that 2022 bear market was it was just the mega caps that were being crowded into. All right. Again, there were a few isolated growth names, but the majority of the buying and what carried the indexes coming out of those 2022 into 2023 were mega cap, if you were lucky, some large cap names, right? So no real stock picking under the hood, no new leaders, no new growth names. So you can see how that can throw a monkey wrench into my approach. If I'm waiting on that, right? If I'm not buying Microsoft and I'm not buying Amazon, right? And they rally for 2-3 months, now I'm certainly not chasing those names. If I'm waiting on fresh new growth stuff and it doesn't show up and they just keep buying Microsoft and Amazon, that poses a problem for me, right? So you could see, even this is what makes the game difficult. Even if the market is making sense to you and things line up the way you want them to line up, you can still get thrown for a loop. All right. So the way I approach is that when I do get thrown for a loop, I just stay nimble. Right? I don't change my game. I don't force myself to do something else because other people are doing it. All right. I just stay nimble. I try to remain tactical. All right. I'm still leaning bullish. All right. So I'm still playing on the long side. I'm still active on the long side, but I'm just not changing my style. Just to accommodate the current climate in the market. And the reason I do that is, I won't make as much money as mega cap players out there. I won't make as much money as if the market set up the way I would like it, but I'm at least participating. I'm making some money, and at the same time, I'm not doing stupid things and getting out of my zone and realm, right? So, but that's kind of that's been the issue. Again, this is not new. It's been from 2022. It's been a different type of bull market, more than not. And to tell you the God honest truth, I'm seeing it again. I'm seeing the same stuff. What I was hoping was that this correction was going to be the correction, okay, the rinse that kind of set off the new real bull market, right? Kind of bull market character, a healthy participation, new names, that sort of thing. And what has been so far has been a scramble to own a lot of the same stuff that we were seeing chased prior to the correction, right? And like you see, right? It's like Bitcoin, even in the equity market, like Bitcoin has taken a leadership role in this rally, right? You ask me, like Bitcoin has been the leader in this rally. So you got Bitcoin, you got pockets of AI, right? Some of the more speculative names have been the better plays performance-wise. Companies with no revenue, no earnings. So it's been a chase. It's been a chase up to this point. It's been a chase. All right. So that's that. Anybody have any questions? So to put a bow on things, okay, I think on a short-term basis, there's elevated risk out there, especially in overextended individual names, especially on the speculative side, right? Because again, secondaries, short reports, all that shit. But even though there's elevated risk, any little selling, I think, really will do a lot of good to kind of just keep people at bay here, right? Keep the speculation at bay here. And to that point, okay, tomorrow we have end of the month. And we got a little different wrinkle going into the end of the month this month. We have pension funds, the rebalance, they are selling equities because of the equity rally in comparison to bonds. Okay? So what would be ideal, tell you the truth, would be tomorrow, the end of the month, brings some selling pressure in. All right? We see some nice selling across the board, especially in the hotter things out there. Maybe you get a little bit in VIX and VVIX. I kind of look spooky, look healthy, look like the market's exhausted. And it was just an end of the month thing. It kind of cleanses things a bit going into next week. And, now even if you're going to play the same names, at least you're playing them off a little bit of pull. Right? A little pull, a little digestion. So even just, a couple days, 1 or 2 days can do a lot of good here to relieve some of that short-term risk. All right. But big picture wise, again, as far as what I'm seeing right now, like, in this crazy world we live in, geopolitically, you can have an exogenous event tomorrow and everything goes down the toilet. Okay. But from what I'm seeing, backdrop wise, it still looks constructive to me. And again, I think the big picture risk is some of the stuff that everybody's worried about. If that eventually flips, that could be a really good thing. That could be a real good thing. You got a lot. You got consumer sentiment. I mean, apocalyptic. You got a lot of these big picture readings out there that you usually would see in a lengthy bear market, right? And you're a couple percentage point off highs. So if those macro things that people are concerned about start to flip and funds aren't positioned for that, you got a lot of runway. And here's the kicker though. You have a lot of runway in a big chunk of the market that really has been ignored for so long. Still to this day. I thought maybe cyclicals would catch a bid today based off the tariff delay. And now I know why they didn't, because that whole court shit with the tariffs was nonsense anyway. But I thought maybe they come in and buy buy a few cyclicals. Nope. They have no interest in a lot of these things. They have no interest. And like, think of this again. I'm just throwing shit at the wall here, all kidding aside, but it's a possibility. You get, a little digestion because the economy starts to get a little slippery, but inflation comes down, and now you got the Fed more accommodative, right? That's a catalyst that nobody's positioned for. Or, just the economic data starts to improve, right? Inflation cools off, the economy starts to improve. All the positive things people were focused about in the Trump presidency start to materialize. So there are a lot of bad things, big picture wise, that could flip bullish. And as long as positioning is not set up for that, that's a real bullish development. Okay, so now you can understand why I don't want this beta chase to materialize in a melt up, right? Where fine, maybe the S&P 500 goes to 6,500, 7,000, but it's game over after that. That's it. Case closed, right? So you got to chase these names and try to figure out, by the time everybody's offside position now in the other direction, where the S&P 500 may tip over and run out of steam. And then you got to get the hell out of the way, because Katie barred the door. It's the end. You understand? So hopefully you can see the logic why, as a bull at heart, you do not want the melt up chase, the performance chase. That's the last thing you want right now. You don't want it right now. Right? Let it come. Let it come. You won't, and like these tariff fears, you want them to linger. Right? It's that wall of worry. You don't want all clear melt up performance chase, because that's when things get really dangerous. At that point, like I was telling you guys, I was telling Steam Room members, I want to sell my longer term stuff into that. I don't want to put on longer term positions into that. Right? I'm looking to sell into that. So that would be the complete opposite of what we have now and have had. Cyclicals, Chuck, there's been very few here and there, right? Like you got deer, that's been really good. But it's like they go into the cream of the crop, right? They go into the studs of that particular group, and that's it. You got like a deer, but then you got, look at some other cyclicals that, look like they're bidless for months and months now, right? So you got some of the top-notch names that when there's a little rotation into cyclicals, that's what they crowd into, but then it ends there. It ends there. So, you got healthcare, you got an abomination in healthcare. What's interesting, financials have been really quiet of recent, but a good quiet, a healthy quiet. Because you can see they got really just, like many other things, they just got overheated here, right? So you get some breathing here, some digestion here, and the financials, that's kind of been the sweet spot of cyclicals, if you will. But even there, right, you've noticed JP Morgan, Goldman, Morgan Stanley, and then, the underbelly of the financials really haven't caught fire yet. That's why when we see one that looks interesting, you kind of get a little excited about it, like a Schwab. All right? But overall, the underbelly of the financials really hasn't caught fire yet. But they still look good. Again, they've come a long way here. They've come a long way. Sahil saying PCE tomorrow. Yep. Wow, a lot of data this week. A lot of data this week for a short week. You had NVIDIA earnings, and then you had economic data all over the place. Because this is normally a really, really quiet week post Memorial Day. So what are you guys looking at in particular? Yeah, like okay, so here's an example. Let's be honest, right? Bloomberg had an article. There's a SoftBank out there or somebody like that that's been gobbling up longer term exposure in these type of names. Okay, now again, that's good and bad, especially SoftBank. They don't have the best track record for it. While that buying is taking place, it adds a bit of a bid in these names, but they haven't been proven to be right on those bets. You understand? The turnout of those bets haven't been good for SoftBank. So again, you just to me it looks like who mentioned that? Max? Max, to me it looks like this, right? To this trader's note. Everything, even the leap buying we've seen, and they've done well so far, but even the leap buying we've seen has been, in my opinion, beta chase looking for exposure, right? So in other words, pretend you're a fund. Into the lows, you're short aggressively, you have no long exposure on, market pivots, makes a low. Now the momentum starts to build to the upside. You got systematic funds starting to chase. Okay. How you can't buy equity and get enough exposure on. There's no way. So what you're going to do is you're going to go out with time and bomb a Microsoft, bomb ARM, bomb NVIDIA, bomb a Meta, right? With $10, $20 million of calls, upside calls with time, you can make a dent. You have some exposure on. You don't have enough time to buy the equity because you got caught flat-footed. So that's what I think we're seeing in general. Not even just now; it's beyond the big guys. I think it's even in spec land, right? Short covering, they get caught short. They got to sweep calls now. Because some of the big guys have rallied so much, they're chasing performance. Let me get one of these little guys that have momentum, and I sweep $1 million worth of calls. For them, it's nothing, and you're catching some of the momentum. So again, if it hopefully makes sense how I'm saying it's forced buying, right? Think of it like you and me, Max. Okay, when we have conviction, right, and we're buying, it's different than if the market's starting to rally and you really you have no long exposure on, right? But you need to buy, right? And kind of I even besides clients, right? If you have clients, you feel that a lot more. But even we feel that FOMO, not even in a negative way all the time, but we feel that FOMO trading individually. Okay, I feel that now currently. I feel it off the 2022 lows. I'm waiting for some good looking names to start seeing accumulation. We're not really seeing that, but the backdrop's still bullish. I'm not going to sit here and not do anything when there's a high probability that there's bullish momentum out there and the market's going higher. So I'm going to participate, but I don't have that conviction. You understand? So that's kind of, on a whole different magnitude of things. That's how it is out there with these funds. They're forced to buy, right? Based off price action, or they're buying for different reasons, right? Because they believe in Meta, longer term, or they're making a bet on a business over the next 6 to 9 months. So up to this point, I think there's been a lot of forced buying out there. I mean, to the point where you really can't tell what may or not be forced buying, right? Like ARM leaps, right? We saw some now leaps, ASML leaps, like right there playing all that stuff, eToro, I still got 1,000 shares of eToro, but that all the crypto shit looks like shit. You know which name I got caught in? Say, this piece of garbage. What the fuck is his name? I just drew the blank again. The one we thought it was an IPO, but it came from the Canadian thing. Hold on, I'll tell you in a second. I got it right here on my screen. Galaxy, this thing. So I'm still holding this pig. I got caught in this offering, an offering. Exactly what I was talking about earlier, the risk out there in these names. So kind of the couple of the Bitcoin plays that I've been trading, I made a decent amount of money over a couple of days. I kind of gave it back on this pig. Galaxy, I'm down on. I'm still holding it. I don't have a lot. I got 2,500 shares, but it's a piece of shit. This eToro, I got only 1,000 shares left. I had more of it, but I traded it. I traded this. And what else? Everything else I pretty much sold. I had BitDeer. I sold that. I traded that. I really don't have much of any other shit. Oh, and I got 1,000 left of this that I traded. SERV. But that's it. That's all I kind of have left from the new batch. I really don't see anything that gets me excited at it. I tell you, like a name like this, I'm tempted to. I've only got 1,000 shares, and that's the crazy part. But I'm tempted to sell ahead of earnings now. I mean, I don't know. Like point wise, okay. Think of this. Okay, and you guys know I don't bullshit because I don't talk big numbers. But I got 1,000 shares of this, right? So I've had 1,000 shares left for a while since back here. Okay, which is up $52 from my entry. $52 on 1,000 shares. Now 1,000 shares you leave behind because you don't want to sell it if it's up, right? It's a little amount that you can leave behind. But like, look at this rip here. And we're seeing some put protection now, right? Which is smart. But what am I going to do? I'm going to watch this thing go into earnings, and then God forbid they miss in the least way. This thing could be down 20, and it would be nothing. If this thing is down 20, it's in the 70s over here. Yeah, this rip is outrageous here. Look at this, 40 to 95. So, get to the point. The quality names, guys, right? The quality growth names, or just in general, the quality names, they look like this. They look like this already. Okay? There's not really anything, or especially new, but anything sexy quality growth wise that is at a decent spot right here. It's kind of the issue. Yeah, all right. So 300 shares of RBRK was worth leaving 300 shares behind, wasn't it? You're up $50 on it, CEO. Over $50. Just Max, honestly, that's what you would do here. You'd leave the 1,000 just because it's 1,000. You just leave it and forget about it. That's what I should do, right? God honest truth, if it didn't have this type of move, just straight melt up, I wouldn't even consider it. I've held through this chop and all, right? Because look, it had a rip, it consolidated, it was healthy. This is just insane. And now going into earnings, you got some risk there. Maybe buy some puts, but I don't want to do that on my longer term stuff. I don't want to do that. But that's it, right? Let's on the speculative side, there's definitely some money to be made. There was some aggressive buying. You guys nailed it on that stock. I day traded it. You guys held it on NVTS, right? This was a nice mover. But again, just a lot of these things was here. Now it's up here, and to chase them up here, There's a lot more risk. There's a lot more risk. Tomorrow, one of these names can announce a secondary. That's what they should do with the fundamentals some of these things have. All right? That's what happened with this. See, unfortunately, this wasn't an IPO, right? A lot of us thought this was an IPO. If it was an IPO, they wouldn't be doing a secondary a couple days after the IPO. This was on the Toronto Exchange and got listed on the NASDAQ. So again, this on the Toronto, this thing's probably up huge, right? From when it was on Toronto. And they took advantage of it and announced the secondary. Big picture wise, that may be a positive. They're raising money and taking advantage of it. That's not bad. But short term, you're going to deal with this shit. And that's the risk out there on a lot of these speculative names, them doing offerings. So be careful. Sell the 1,000, buy at the money cost. You're talking like Ranchero now. That's what I should do. That's a great point, Yaya. But the problem there too is because of earnings, they're a bit inflated. And I feel like I'm getting robbed there, but I shouldn't even think about it, right? I should go buy high delta and I don't know. I still got risk that way. I got to think about it. I day traded it, struck. I didn't hold it overnight, but here you go. Okay. Here's the new flow, right? Here's today's action. This N power. By the way, I remember this N power. I traded it here. Off action. Okay. Look at what the stock has done since. Now, there's buying here. Today, those calls were hot, right? But, look what we're buying, guys. Okay? I can't even pull up the earnings. They're so bad. Like, just understand what you're buying here. Okay? This is the crapola of crapola. Okay? This is dog shit. And I hope you guys understand why I'm talking like that. You guys know I love trading these names. Okay? I love to trade these names. But after the rally in these type of names gets a bit extended and stretched, there's a lot of risk in these names when the momentum runs out. A lot of risk. Okay? There are no fundamentals to these things. They're all story, all of them. All right? Now you can make the argument that this is down here. And that's one of the reasons I day traded it today. This is down here, okay? And you're starting from a floor here, right? But, this thing, why is it down there? This thing could go out of business tomorrow. It wouldn't shock me. Like, look. I got to refresh this to get the earnings up, I think. Look at this. Okay? 0 revenue, and they're losing $1.55 a share. They missed by $1.43 last quarter. It'd be total squeeze is probably what it is. Okay? So, again, I'm not trying to spook anybody or shit on any of these that you may like. I just want you guys to understand the risk in these things. Okay? There's a lot of risk in these things. Just understand that. Understand that. That's the only point I'm making. I like trading these things. You guys know I love trading these things. Just don't get caught crazy-handed in a bunch of these things. That's where the hickey could come, right? If you own 4 or 5 of these things as they're running and they run out of juice, you're going to get lumped up. You're going to get lumped up. Yeah, no, and Struck, you know that. I'm not talking you. You know that. You know what I mean? We talk about these stocks. I'm talking about some of the new people or people on the webinar. I don't want people taking our conversation about some call activity in one of these stocks and they end up buying equity and holding it and the thing goes bankrupt on them. You know what I mean? I don't want that going on. Ideally, and they don't have to be impeccable fundamentally, but the best, right? The ideal type of stock or flow that you want to try to buy at good spots are the in between from this spec junk and the Microsoft, right? So it's kind of the under the hood, legitimate, large, mid cap type names. Those are always the best. Because when they catch sweeper activity and they have that growth to them, again, you guys know the story. I tell you all the time. When the funds want to put a name on their book and they get aggressive in these type of names, this is what they do. This is what they do. It's like an endless bid in these things. You know, again, you guys know a lot of them, right? Because there aren't too many. You see these things. Oh, here's one you guys know, right? The APP, right? When there's growth and the streets start to recognize that growth, they start buying it. Things can get really frisky. Stacy's really pretty, and Stacy is a doll. We love Stacy. More importantly, all right, Chuck. So be nice to Stacy. Stacy saying, looking at iRobot again. There was a little bit of flow there, Stace, today in leaps. There was a little bit of flow in 2027 leaps in iRobot today. A little bit of flow. What else? Anybody else see any names that they're interested in at decent spots outside of pure speculation? Kind of decent company, decent growth names. A few of you bring names to my attention sometimes that I haven't seen, and then they catch leaps. On the spec side, right here again, the top flow, they started to rest today, which is good. But keep an eye on them if you like these names because they're probably going to buy them again. RKLB, they love this name. Sweepers absolutely love this name. Okay, love it. So here you had a nice little rip and kind of just back here. This has been the best quantum name by far. QBTS, which had a ridiculous move. Okay, could use a breather. Started breathing today. That's been really the top, in my opinion, the top spec flow are the name that you guys trade recently. NVTS. That's had some real active flow. Big gap up there. But I'm saying, you could very easily get a little digestion here, right? And that's something to keep an eye on. Well, that's what you would want if you're looking to replace them. Right? You want to be really careful chasing these things. Yeah, like here, this is kind of the epitome of what I'm talking about. A lot of action in this name for a while too now, Papu. They've been buying this name for well over a year. And had a nice run recently. Today, obviously, there was some sort of news. I think it was an offering, right? You're going to see a lot of that, guys. You're going to see a lot of offerings. Okay? Let me see. Sure. They launched $75 million common stock offering. Okay? So the way kind of I look at these speculative names when they catch offerings, let them sell, let them digest. Usually they price where they do the offering. The stronger names will find some support around that area of where they price and then keep an eye out for flow. Like that's how I usually approach names if I'm interested post offering, which is not necessarily a bad thing, right? Because you kind of get that risk out of the way. I think because again, the risk now is that they do offerings in a lot of these names. That's the risk. Once they pull back like this, right? Allow it to settle in, see where they price the offering, the stock, and then look for flow to tip you off to get back in. But you're much better now, in my opinion, post offering than kind of before the offering. Right? Not a lot of people feel that way because it dilutes the flow and blah, blah, blah. But again, that main risk is taken out of the equation, that offering risk. But that's the risk here in all these type names. Okay? They've done a run. I mean, they had quite the run, and now they're going to take advantage of it by offering stock. And you know another thing I'm seeing, guys, that really is not that bullish in a lot of these spec names? There's insider selling all over the place in these things. Insiders are dumping these things like they got the plague. Right? So now you have, the risk of just momentum dying out, offering risk, right? Secondary risk, short report risk, okay? Because you see an uptick in all these short reports after they run like this, and insiders are selling into the rally. You know, that's the bad part of this right now. That's the bad. Okay, ideally, again, if we can have it our way, after these things cool down a little bit, and let's say the spec names start to heat up, that's where you want to start looking for some newer names that maybe didn't catch much action in the prior run-up, right? There are better spots. You can get in and out of them before the big rally and an offering and shit like that. Which a lot of you guys have done, right? I mean, a lot of you guys have traded all these things. Struck played this thing. This thing had a real nice move, PCT. But all these things have that risk now. All of them. Right? Maybe some less so than others, but they all have that risk. They all have that risk. What else? I wanted to throw a couple of other things at you guys that I'm not too familiar with. Bitcoin, which is a little interesting, right? Bitcoin, which kind of led, again, in my opinion, led this rally. You're seeing a little selling there. Now, again, selling is normal. What I find a little interesting is that this selling came off of news of the new Trump fund raising billions to buy Bitcoin, right? So you had kind of positive news and some signs of exhaustion. Again, may not be much, but maybe kind of leads a little equity rinse. Again, just a rinse. And the other thing, what I was asking you guys, do you guys follow the M2 with the leg? Let me see. I can pull it up here. Watch this. Oh, wait. You Bitcoin bros out there probably, where's, hold on. I want to find the one that I look at here. This is it? Nope, that's not it. Hold on. Is this it? I think that's it. But let me see. Hold on. Oh, this is it. Okay, let me get some of this crap off now. Hold on. Oh, what'd I do? Oh, so you see this? The correlation's pretty crazy. What happened here? I'm frozen? Oh, you son of a... Oh, doing like an idiot. Hold on. I'm drawing? There we go. Okay. So you guys see this, right? Look at this. So this is kind of a lead on M2 and liquidity, right? Kind of what Bitcoin fuels off of. Okay? And you can see, right? This led out of this consolidation, Bitcoin big rip. This led Bitcoin into consolidation. Look at this. Right? So just to give you guys an example, before Bitcoin did this was up here. Okay? Before this move. You understand what I'm saying? And now, like, look at this. All right? So, okay, I don't know the proper way to look at this thing, but like you get a little digestion possibly, but you still got some extension here. USM, this is. I think this is what this is. This is money, M2 money supply with the leg. M2 money supply, top 20 USD. Anyway, I know a few liquidity guys who follow this that have been showing me this shit. And kind of there's correlation to equities too. Right? It's just Bitcoin kind of leads on the liquidity front. Right? So literally, I know because I was when we had into the lows, okay, this indicator was already shooting higher while the market was still selling. All right, so this is still going high. High little digestion. Money supply. Yeah. Crazy. And what's interesting also is you've had liquidity kind of taken global liquidity kind of taken a little breather recently here last week, but overall liquidity has been on an upswing as well. Global liquidity. Again, could be why we're more than likely why we're seeing this, right? Financial conditions ease so aggressively. Is the Wall Street Jesus use his name in Spanish or English? Are you asking, do people refer to me as Jesus? Do. People do refer to me as Jesus. You could call me Jesus, G, if you like. I take no offense. TTD. Let's see what TT looks like. TTD. Yeah. What about team? What's that up there? Oh. These names that are left that really haven't participated. You got a lot of these, what they're considered high multiple growth names, right? Team, TTD, we saw some action in July calls. What was the other one? MDB. These guys got to report though. Some of these MDB. You got a lot of these names. Again, I'm not the biggest fans of these names, but I guess it's better than crowded older names. But we're seeing a little bit of flow. Bill had some decent July flow. I played Bill at Quick Trade. I was in and out of it, but it had decent enough action for me to play it. Baba. That again, China looks interesting to me too here, right? Because you've had some selling on that front. I think they buy this dip again. It's just a matter of where. I think they buy this dip again. But you would possibly look around here. You got a downside niner. So maybe you get a little support here. But, doesn't look bad. Again, it's China. You're going to have to deal with the tariff headlines and all that stuff. But if you're buying off pullbacks, I think it makes it a little bit higher probability for success. I'm still holding on to a piece of my yin calls. I have Jan calls there. I'm still hanging on. I don't know if I'm going to end up rolling them or what. But yeah, again, I just can't get all that excited about China, guys. I can't. It's almost like secondary to the U.S. If I like to set up in China, I'm more inclined to play a yin or something like that. I mean, there's some names out there that look somewhat interesting, but what the hell do I know about these China names? Like what the hell I know? I don't know what the hell this shit's doing. The China market's a tough market. Yeah, snow's been really hot on earnings, but you had to kind of be in it off earnings to get this pop. But again, maybe you get a little digestion here, and your possible reentry. Again, I think if you're in these names and you've rolled and you're holding, you're fine. Like you don't want to get too cute, but kind of to like what Sahil and I've been talking about, new risk, right? For new buys, what are you buying? Are you buying snow up here now into exhaustion here? I think maybe get a breeze. I've seen it run through exhaustion. These names, like, look here, okay. Well, you had a little bit of digestion here, but you gotta be really, you gotta have good faith in your trading skills to navigate that. Like here, look, this looks similar, right? You had exhaustion here. Let me get this M2 shit off now. Here, right, you kind of ran into some exhaustion, and look, right, a little bit of a breather, and you had another leg. You closed snow? Yeah, well, you had nice profits in those, You had nice profits in them. WRBY, we saw a little bit of flow. I think there was news there. There's another spec name, right? Yeah, this looks pretty good too. Oh, you got actually some profits there. Looks decent. Let me see. What the hell did they buy in this? Remember Kitchen Action. Oh, wait. Is this Chinese? No, right? This is not Chinese, is it? No, okay. There was one that I keep thinking is American. It's not. Yeah, mostly short term. I think there was one day of decent buying in this. Here they're buying June 20 calls. Cheap flow. See? Cheap, unusual flow. Here, what were they buying? September 15s. That was it. That's the one I think of. There was a decent sweep here. Where is it? April 12 and a half. What's the date on this? Oh my God, wait a second. Well, how far back am I going? This is not in chronological order? Yeah, this is it. This is the one I'm thinking of here. April 21st. This is it. The stock was what, 13 and change. Oh man, it's 21 now. All right, again, look at like where it caught a half decent sweep. All right, and now now you're here. I think that's the problem. That's kind of the problem with a lot of these. By the way, it was a messy day. So here was kind of the best, even repeat activity. This was the cleanest action today. And this has been on quite a roll too. SSRM, it's a gold miner. You got an upside niner there now. But look at this stock. There's been some nice flow in this name, really active. And to that point, The gold miners look interesting. You got an upside niner here too? Jesus. I think what they do in gold is they kind of try to wear people out here, right? Because everybody's eyeballs is on this. So maybe you get some length behind this digestion here. But if you think it eventually breaks out, you try to buy these little tugs. But this too, guys, like this, this is not early stage. I know a lot of you guys think gold is going a lot higher longer term, but right? So here, maybe you get something like this again. Look, whoop, see this and this. But like, look at what we're looking at here. I would still treat it as a trade, personally. That was the top action yesterday, but I heard it was the Kit Kat hype, right? That was behind it. Let's see. I posted it in the room. Oh, I can't even put a symbol on you. The hashtag. Yeah, here it is. No. What's with the search? Oh, here it is. Record call buying in Unity software opens position 22% above spot. Unity saw over 330,000 calls Wednesday. Here it is. Traders noted renewed retail attention linked to Roaring Kitty. Yeah, so that Uber is a tricky name flow-wise, right? Really tricky name. You had really nice buying coming out of here early in the rally, and then recently there's been some aggressive put buying mixed in. I don't know why. I know Ackman's in the name, right? But flow-wise, really tricky. You don't get the cleanest of action in this name, unfortunately. You don't get the cleanest of action. Yeah, that's it. What else? Maybe they rotate into financials. They certainly can do that in a bit. Do I like NVO? It's these foreign names are tough. This doesn't look too bad though. NVO. They're gonna try to break this downtrend here. That's what I would keep an eye out. You see some flow. Maybe they're trying to front run that. I don't remember seeing call buying, a little protection in it. This name, we saw some buying. I know a few people in the room have an interest for longer term stuff. UNH, we're buying December calls. So with some time, this thing got annihilated. But the healthcare in general has just been awful. Look at this. What I would look, a lot of times when they like some of these pharma names, this is the name they come after with good looking buys. ABBV. They usually come after this with nice size, big money, and with time. They're known to buy off these pullbacks. They haven't shown up yet, so I would keep an eye out for that in these names, because this is one of the studs. They aren't going to pay the UNH bulls anytime soon. Yeah, well, I don't disagree with you there. That's probably why they went all the way out to December. They're probably going to need all the time they got there. But yeah, this is strictly buying. But you got some insider buying there too, right? So that's promising. It's tough. This is tough. INOD T. I remember this name. INOD caught some interesting action here, and they obviously are underwater. They chase the earnings if they're still in it. But it doesn't look bad. Spot wise, I kind of like it spot wise. And like if we saw a sweeper activity with a little bit of an appetite here, I think that would be ideal. I do like this spot though. It's kind of sort of right congestion like this. You don't know how long it's going to last, but it sweeps may tip you off. But yeah, the look, I like the look. Oust. Let me see, oust. Oh wow, ouster. The hell is this? I remember seeing action in this. Oh, this is post earnings too, so that's good. High resolution LiDAR sensors. Robots too, huh? Yeah, definitely got an interesting look there, T. Oh man, see, you scroll back some of these things. That's kind of the problem here. You probably got a big short position too because of it. So maybe you get a nice squeeze. I played this SERV. I left 1,000 shares because it's robotics. Just so I have a little bit of stock in it in a robot play. But again, this is old news. We've seen this. The circle's still there. The last time we saw action heat up. Yeah, that's the thing. Like, hopefully we see some names that, like, up to this point, we've seen pure speculation in that camp. You understand? Like story-based names. That's what we've seen in a lot of those hot spots. I'm hoping to see kind of more. Again, they don't have to be even profitable. Just the growth is there, real numbers. Real numbers. Like a lot of names. Like this serve is half decent. This Rocket Labs, right, is a little half decent revenue wise. Oh, I don't know. You know what I mean? Here's the big problem. The IPO market's been dead. That's the main problem. The IPO market's been dead since the start of 2022. Dead. That's why the few names that have met the credentials legitimately to come public, have performed well. Now they're SPACs and they're all sorts of shit going on. It's how Serve sees oust. Interesting. I'm definitely going to keep an eye out for any action in there, even nibbling tea, and I'll even tip you off on Twitter if I remember. RDW, that we saw action in, right? Oh yeah, I know this stock. They bought an AI company, right? And it had a crazy move here. So what do they do, Sahil? Now, what is this? What's the sizzle here on this RDW? Well, again, looks interesting. Looks interesting. Oh yeah, Symbotica, right? Who mentioned that? Symbotica. Madden, yeah. I don't know, Madden, tell me. You probably know more about it than I do. The flow, again, look here, let me show you the flow in Symbotica. And I'm sure you know, but you probably know more about the name than I do, Like here's some of the flow it's catching. April, April 23 calls. That's not even that bad. April. Oh yeah. This is not bad. Yeah, again, it's 69 grand, but at least it's a normal order. Like I remember seeing flow that was way out of the money. Look at this. When is this though? No, look, I'm going back too far here. February when? February. See, I don't even remember this action. You remember this action, Madden? February? So where was that? Here? So they were underwater initially. 40% short interest robotics. Wow. And is it a SPAC, Madden? Is that what it is? $85 calls, right? Yeah, it was something crazy like that. Crazy out of the money. Jan 85 calls. Jesus Christ. 62 and a half. Like, I mean, so you know what I mean by speculation? That's what I mean by speculation. But I tell you the truth, this order here, where is it that I just highlighted? But wait, 2025. So this is underwater. Well, actually, they break even on the stock. This is a nice sweep here. Longer term. Oh, so yeah, because this is an IPO. Something happened back here, man. That's why I thought maybe it was a SPAC. But anyway, that space, it looks interesting. And I get it. If you want to find something even kind of possibly even tuck away in that robotic space, makes a lot of sense, right? Makes a lot of sense. On a shorter term basis, Madden, I really, right, like here, you're kind of in no man's land. You've had a rally from 15, 16 to 30. Does it continue from there without some sort of breather? It hasn't been able to do that, right? GJT, yeah. You gotta hit him up, rack his brain. Hit him up. But yeah, let's see again. Let's see if they have an appetite for it. That would be a very promising sign. It's definitely now on our radar because of the flow it has seen. And aggressive here. Maybe that's to tell that they're front running this breakout. So if you get a little bit of wiggle waggle here, and we see some more buying coming in, that could be putting us off to a breakout. So definitely worth watching, no doubt. GLNG, Papu, is a quality shipper that just continues to see good-looking flow. I think Trey owned it. I think she traded it. I don't know if she's in it anymore. But, we've been seeing quality buying going back to here. They got a pretty aggressive here with some good-looking action. And honestly, every little pullback has been a good-looking sweep that shows up supporting it. Even recently here on the dips. So, again, all I can tell you is good-looking name with good-looking flow, not new. They've been buying it for over a year. But there are several names like that. Here's another one. I'm kind of kicking myself in the rear end. Tree, you probably remember. Like this was an underbelly defense name. I think they do drones, if I'm not mistaken. right? So that was kind of the sexy appeal to it a year ago. But it's a slow, it's a slower mover. But look at the move. Look at this steady uptrend. You know, decent growth, right? The sector. I mean, drones for defense. I think they do drones, something to that effect. But there's been a nice winner and continues to see bull flow, right? We just saw recently again some more bull flow. All right. But yeah, these are names in like GLNG, steady uptrends that they buy dips continuously on. They buy dips continuously. It's just some of the movement now as these things get longer in the tooth are, you're going to get these pullbacks and then pops, pullbacks and pops, right? Because they're kind of older news in a sense. It does do drones, Katos, right? I wanted to tuck away some of this. Sort of on that robotics theme, like you pick up on some early flow, good looking underbelly name. So that's generally, you guys know, to those of you who know me, that's what I'm on the lookout for. Even now. I can't find it in me. I can't do it, guys. I can't build a position in Microsoft and like sit in it. I can't do it. Those are the names we need to look at. Yeah, exactly. I think honestly, all those names, too, even the spec names you like, because they've been so active in nuke space and all, seem committed to buying these things on pullbacks. The point I'm making, and you say the same thing anyway. You got to be careful chasing the rips. And it's tough. Like when you're at a point now where we are in the market, and there's really a lack of fresh setups. It's hard to just sit and not chase too early on some of these older names. I think I've seen this one too. AVAV. Yeah, that's not a bad looking stock here too, right? So these are definitely names to keep an eye on if we do get a little shake or just find a little resistance here. Oh. Maybe get a little breather, kind of some congestion here. Here's another I considered a quality name. They just bought again. ISRG. Here's another name I'm kicking myself about. Look, the circle's still there. Look at the setup in this thing when they started buying it. Okay? The old cup and handle, saucer and handle for you technicians. You had a real nice drawdown correction, battled back to ties, then this little shake and bake here. That's the ideal right there. And then all of a sudden, you see a pickup in sweeper activity and good-looking sweeper activity with time. Look at this rally. And, this is legit. Because if you're right, you're going to cash a nice ticket because this sucker can move, ISRG. So now, off the dip, we've seen some flow show up again. All right, to Sahil's point, on these are the names you kind of look for flowing. All right, here's this spot, so tricky. So tricky. For me, anyway, it's tricky. I got some cake toast up over $2 so much. Nice, Sahil. So yeah, guys, these are all the type of names I like, and kind of waiting on here. And again, listen, I'm gonna keep making the point, okay? This again, okay? This is the forced buying part of the rally, okay? If a bull market or a new bull trend is going to come out of this, it very easily, right? The real flow, the real buying can come at a different spot. It doesn't have to show up at the lows. So the names we kind of are talking about here, growth names, right? It can show up later after a market made lows. And the 2022 was a good example. I mean, that was even exaggerated, right? Where we talked about. Because kind of here, you see this correction here? That kind of gave birth to the type of names that we are talking about. This was all Mag 7. Like that here, okay? This rally, and think about where we are now, okay? This rally off the lows, I was complaining, a lot of us were complaining about the same shit we're complaining about today. The same stuff, flow-wise. And then, it took this pullback and then obviously a real Powell Yellen pivot to kind of kick off AI, kick off the growth names. If I'm not mistaken, SMCI, the market gave birth to SMCI then. Sends. Let me see this LT. Oof. LT with a doozy. I think this is a penny stock. Let's see. Look at him. Look at what he's telling me to buy here. What are you trying to do to me, LT? Are you want me to be your exit liquidity? Is that what you're trying to do to me here? Later, T. Have a good. Yeah, I remember, and obviously this is a much better spot because I remember somebody talking about buying it here. And this is kind of the point we're talking about today, where, it's late. But I like this spot, LT. I do like this spot. What do they do? Sell me this pen. Sell me this pen, LT. No, I know. I'm pulling your leg. I'm busting your chops. I know you're not trying to give me the shaft. I was busting your chops. Tell me what's the sizzle here? What's the story? What's the excitement? It's got an exciting name. Oh, look. They just did an offer. At least that's out of the way. Diabetic sensor. Really? You realize you do more in revenue trading than they do? Your trading revenue is higher than their revenue. Just figured I'd let you know that. We have seen flow in this name before. I remember it, by the way. But all kidding aside, LT, I like this spot. I really do. Because, again, you're kind of like right here, right? Look. So if we did, I make you a promise. If we saw some action come in, I'd buy some. And I think the other good thing is that secondary's done, right? May 16th. Did they price it yet? I don't know if they priced it. No, we saw sweeper activity in this once upon a time. In this squeeze here. So there's been flow in this name. Oh, yeah. I know Dexcom. Gotcha. So that's the speculative Dexcom. But again, I like this spot. I don't mind it one bit, right? Like at least LT's buying it at the right spot before this happens. So interesting, LT. Definitely interesting. Yeah. That's again that's the better way to put it. It looks like the bearish price action off of this rip is out of the way. Exactly. Is it really, Max? I'm not too familiar with it. Again, I remember seeing flow in this. I might have traded it. For me to remember it, I probably did trade it. There was another one that I used to confuse the symbols with. Sens, and there was another one like Sins or some shit. One of them I traded. I don't remember which one it was. One was like SNS? Yeah, like, I don't know. One of these names I traded. But risk reward from that spot, not bad at all. For a penny stock, anyhow. Oh, I see futures down a little bit. Here, okay, if you're going to pray to the market gods, here's how you do it tonight. Give us a little end of month shake and bake mañana, right? We go into next week, little cleaner tape, right? And at the least, you have some stuff that was kind of overheated, overextended, off a little bit of a pullback, even for trades. So end of the month tomorrow with pension fund rebalance to the sell side, maybe we get a little bit of weakness, and that could be a good thing. SITM. Is that? I think you mentioned this to me once before. Yeah, this is a good looking name. Oh yeah, I remember this. This one I like, Papu. You know, I like this one. $200, kind of under the radar. You know, expensive, but they probably have crazy growth. But yeah, I like it. But you know, listen, same thing. So again, on a short-term basis, you know, you've done a lot of damage here. So you probably need to digest this a bit. Right? And a most bullish, what did I do with you? Yep. Even something like this here, you don't mind seeing. All right? So a little shake and bake. That sort of thing. VD. I know the name. I remember earnings flow before earnings a couple quarters ago. I haven't seen action since. I know GJT is a big bull. I think he's a big bull. I know he knows the name well. Do you own any of these LNG names? Because I know, like, I think you owned EQT and you got out of it. I don't know if you owned any of the others. I'm still holding my EQT. I have no intentions on selling it. But I had a real nice entry on that. Look at that. See, that's kind of what I was saying. Look, they front run the breakout. So kind of the action here, you off that not necessarily a breakout was coming, even though there's a higher probability of it. But if you're seeing quality flow, and you remember, they were bull risk reversals here. So it wasn't cheap sweeps. They were selling puts to finance calls. They were bombing this thing. So that's tipping you off that a fund is positioning in it. At least you're going to see an uptick in flow, which can coincide with upside. And as you guys probably know, the flow hasn't stopped. We see good-looking betting in this thing continuously. It paid a dividend, you know, even better dividend down here. Now, obviously, not so much. But all these names in the space have seen buying. AR. This is one that has seen good-looking action from time to time. You know, so I'd say EQT probably top flow-wise, AR, and then the others kind of as you know, LNG, nat gas gets hot, it catches some play. WMB, I know that stuff. Let's see. Oh yeah, look at this. My God. Goodness. Strong name. Really strong name. Some of the more speculative ones, RRC. Well, it's not really more speculative, but you see more spec action, I should say, in it. This is another one, RRC. But the ones that see action, EQT, AR, RRC. And this that Sahil brings up is interesting because what's interesting about it, I think it was spun off, right? And it's been bearish. So now if you can see some decent buying to come in here with time, that would be ideal. That's Kathy's name. Finally turned the corner or no? This is Kathy Wood's favorite AI play, last I heard from her. I don't want to put words in the mouth, but I remember something to the effect that she sold NVIDIA thinking that path over the next 5 years would outperform. Something to that effect. I could be wrong, but something to that effect. But this stock can't get out of its own way. It's a profitable name, so it's not like complete garbage. But, this was one of those COVID names. And look at this. Oh, my God. Like, I remember Kathy Wood loading up here, post-IPO. That's no good. Like hockey stick, exactly. And then some. And then some. But, yeah, I don't know what the problem is. I don't know if the shorts just have their way with it because, the numbers aren't that bad. They're actually half decent compared to some of the other shit we see. Path a year ago, should run to highs. Wait, highs, yearly highs. He's probably talking about. I don't think he's talking all-time highs. All-time highs, 28. Oh, really? She started selling Path? Oh my God. My God. You're talking yearly highs, LT. You're not talking all-time highs. All-time highs is $90. Yeah, it's like TDOC, exactly. Exactly. Oh, yeah, and you know what other name I played? Honestly, I haven't looked at it since I sold it, but Peloton. There was spec July call buying. I do I want to buy Peloton with time? Like, come on, I don't, and listen, I mean, is it the worst idea here as a spec lotto play down here? Again, you talk about hockey stick. But this is not what I'm out there looking for every day. I mean, it was aggressive activity. You saw it. I bought it. I sold it, I think 2 days later, made a little bit of money, and that's it. But, I don't, again, this is a lot of work, this much bag holding is a lot of work. You want clear skies when you start moving. This is a lot of work. Like, look how many sellers can show up here. Look at all this. Yeah, Path has been profitable for a while too, I think, Sahil. I don't know what the problem is with that Path. There's got to be something. Probably has a huge short position. They just keep pounding it. But I noticed the same thing a couple of months back, a while ago. I couldn't believe it. Next, my SPY rebalance. Watch those leak calls. All right. I can't believe we're going into already, man. Scary shit. Scary shit how fast it goes. But all right, everybody. Enjoy the rest of your Thursday evening. Again, tomorrow, end of month. So it might get sloppy out there, and you have pension fund rebalance to the sell side. So hopefully it brings with it a little bit of weakness. That could be what's going on in Bitcoin now too, and clean things up a little bit into next week. All right, we'll take it day by day, week by week. and we'll see how it goes. AI had a good day today, didn't it, Max? Yeah. Well, that's a good day for AI. But look at this. This is tough. Tough. They're still losing money. Tough stock. All right, everybody. Thanks for stopping by. Have a good night. I'll see you steam room members mañana. Later, everybody.